Hello, this is Sgc Tax Consulting Office. I am Shigetoshi Fukutani, representative. Today, I'm going to talk about an article listed on New York Biz. I'm going to talk about New York real estate investment recommendation. And I'm talking about Japan, US, taxation, investment judgment analysis. In this presentation, we assume the Japanese resident or Japanese make real estate investment in U.S., especially in New York. When we make an investment, real estate investment in New York, income is rental income when you rent it as apartment or house, or capital gain income when you sell your investment. In any case, income source is US, thus taxed in US first, then including above in Japan as global income taxed in Japan. We have to take income tax imposed in US into account as foreign tax credit. This is the major principle of taxation. When we make an investment, we have three phases. One is purchase. Second is maintenance. Usually we rent your investment as apartment or house, and finally you will get a capital gain income when you sell. And when you purchase in America, in US, in principle, transferors pay transfer tax. There are some exceptions, but you don't have to pay any tax in US. And in Japan, you don't have to pay any tax either. Therefore, when you purchase, what you have to do is focus on your investment, the value, price. You don't have to think of tax. And when you rent your investment, the first cost you have to consider is property tax. New York 1, 2, 3 unit residential, this is a house. You pay. There are some complicated formula. But generally, market sale value times 1.2% for cooperatives and condominiums. Market income value times 5.8%. These are very high property taxes. And Honolulu, property tax is less than New York, but in either case, you have to take these costs when you rent your apartment or house. And for rental income, basic process in America is pay withdrawing tax and pay final tax. And for foreign people, withdrawing tax is rent times 30%. However, if you submit form which shows you will file tax return, withdrawing is avoidable. And usually, because this is simple process, by submitting form, we skip this withdrawing tax. And on final tax return, income is taxed on annual tax tariff, federal, state, city. Okay, these are tax percentage. In New York or Honolulu, for foreign people, there are 0 taxes. And based on tax return in US, you file tax return for rental income in Japan. And if US income tax is larger than Japanese income tax, you simply apply foreign tax credit, or you pay additional tax. Prefecture and city tax is automatically calculated and taxed later, billed later. And selling, final stage. When you sell, you pay New York State transfer tax, city tax, in Hawaii, state tax, and tax rates are like these. These are different among states and cities, but you pay transfer tax when you sell your investment, and you have to take these taxes into consideration when you sell your investment. And for capital gain, first you pay withdrawing tax, sale price times 15%. However, if sale price is 300,000 or less, and the purchaser uses the property as residence and the form is submitted, less or non-withdrawing is possible. But this is very complicated process. We usually pay withdrawing tax. And state, in Hawaii, you pay withdrawing tax. New York, you file temporary tax filing. And these are different among states and cities. And next year you file final tax return and pay tax on transfer income. When capital gain is short, tax rate is same as normal tax rate, and if your capital gain is long-term, privileged tax rates are applied. State, city, you pay, and taxes are different among states and cities. And based on tax return in US, you file tax return for transfer income from selling and land and building. And US income tax is larger than Japanese income tax. You simply apply foreign tax credit, pay no tax, or you pay additional tax. Prefecture and city, these are automatically calculated. And in Japan, for short term, 30% is tax rate, and long term 15% is a long term. These are privileged tax rates. And one thing you have to pay attention is long-term, short-term definition. In the US, 1 year rule is applied for short or long term, but in Japan, on January 1st of transfer year, short, if it is 5 years, retaining period is 5 years or less, or long term. So if you sell your investment on in fourth year, it is long term in America, but short time in Japan, but therefore you pay less taxes in America, but you pay larger tax in Japan. So when you sell your investment, you have to take care of the timing. And taxation is over. Now it is judgment of investment. When our clients try to make an investment in New York, we this is example, prepare cash flow for you and translate it in present value. In this case, real estate investment is $500 million, annual rental net income is $5 million, and 5 years later we sell it at $500 million, and cash flow is like this. And total present value here is $648 million, and the investment is 500. This means over 5 years you get $148 million, and ROI is 5.94%. Is this reasonable? Is this what you get? This will help you make a determination in your investment. And finally, why real estate investment in New York? One reason is faster depreciation. In American taxation, real estate is depreciated over 27.5 years or 39 years. But in Japan, if your investment is old buildings, we have special calculation for life. In this case, investment is 500 ferroconcrete building 49 years ago, depreciated over 9 years, because legal life in Japan is 47 times 20%. We can depreciate it over 9 years in Japan. Therefore, depreciation each year is 55. And if you are taxed at maximum level in Japan, national tax is 45% and local 10%, total 55%. Therefore, tax save effect is 30 each year. This is a very high incentive when you make investment in old New York buildings. In New York, there are many valuable old buildings which are 100 years old or older. And number two, why real estate investment in New York? Hedge. When we look at Japanese government finance, it is very difficult to anticipate the high end in the future. And New York investment in US dollar base is very good hedge for your saving. And also, in New York, you don't have to worry about earthquake because New York is a city built on rock. This is the very different point from Tokyo. Thank you. If you have any questions, please contact us here. Thank you.